Hello, everyone. Thank you. Smart women, you're savvy, and we want you to get very, very savvy about managing your financial life. And so, this is a phenomenal conversation that we will be having that you will learn about. And we have a phenomenal realtor who is going to teach you what are the proper steps to build up your wealth. And it's just not investing your cash, your money, but to know one of the biggest steps for all of us, especially as women and people of color, to build up your wealth by investing in real estate. And it is really important to know what the proper steps and the rules are. And now, for the first time in multiple years now, because we do know many times ago that rates were down, now they're back up, and now they're starting to go back down in March. And now, when rates are going down on mortgage rates, you will see the value of properties go up. So, Tia Hughes is someone that I have known for multiple years and has worked with a variety of clients, and she's worked with me too. Thank you so much.
Of course.
She's been in this industry for 14 years and has been a previous speaker here for our Smart Women Savvy Money group. So, with that said, turning it over to Tia, because this topic, which is phenomenal, so that you all will know what the dramatic impact of home ownership is in building up your net worth. So, that said, turning it over to you, Tia.
Thank you. Thank you for the warm welcome and your kind words. I appreciate it. I'm going to jump right in and share my screen. Hopefully I can do this correctly this time. This one, share. Okay. I think, did you see my screen, the correct screen? I'm sorry, I think
Yes, I did.
let me
You're
try
good.
one more time. Share screen, and we're sharing the screen. Here we go.
There we go.
All right, and we're on. So hello, everyone. Again, thank you for having me again, Renee. It's been a pleasure to do these webinars over the past several years with you and your audience. And I hope that you all can take something away from each of these presentations. Today, specifically, I wanted to discuss with you the dramatic impact of home ownership on net worth. Especially, in an environment where people are always having the conversation of rent versus buy, which, often leans toward the rent side when you're looking at it specifically from a financial standpoint or analysis, considering renting is cheaper than buying in most circumstances. But you also have to consider that buying is a forced savings account. So there are a lot of other benefits that you get from home ownership. And I'm not even going to get into the non-financial benefits of home ownership on this presentation. We'll save that one for another one. But on this one, I wanted to do a more in-depth talk on the financial impact of home ownership on your net worth. Okay, next slide. So Americans do believe in home ownership as a good investment. As you can see here on this next slide, there's no question about that. So the green line is investing in real estate, looking at about an 11-year span. You can see that confidence in real estate as a long-term investment is on top. The green line is real estate. And then on the bottom are some other popular asset classes. So you can see starting from 2011, the consumer confidence in real estate has continued to go up. We did have a little downturn, but we're definitely heading back up. And even though we did have that downturn in terms of consumer confidence, the green line is still on top, right? So I want you to understand that that's still Americans' belief as the best long-term investment. So this is according to a survey given by Gallup, which is a trusted real estate resource. So here, if you want to break it down a little bit further, you can see that this survey from Lending Tree says the same thing. The best way to build wealth is through real estate. So over 40% of people still believe that that's the best way to build their net worth and their riches over stocks, golds, bonds, cash, and retirement. So home ownership's impact. Okay, so breaking this down, we're looking at another chart looking at the nation as a whole, starting from 1991, Q1 of 1991. You may ask, why do we start 1991? That's just when they started collecting this data, the source, which is FHFA. You can see that the national average in terms of percent change in home prices or equity in your home or appreciation is over 300%. That's dramatic. Renee and I were both here in California, and you can see ours is even a little bit higher at over 312% appreciation since 1991. So this is over the last, 30 years. We've seen a dramatic increase in appreciation of homes. Now, breaking this down even more recently, just over the last 5 years, the appreciation went up almost 60%. And these are big numbers. That's how you build your net worth. You know, you're paying down your mortgage every month. Prices are going up or appreciating, and that's how you're building your equity in your home and your net worth as well. Now, I wanted to read this quote. Despite the risk of volatility in the housing market, home ownership remains an important driver of wealth accumulation and the largest source of total wealth amongst households. So study after study has shown that in just about every income bracket, home ownership is the largest part of their net worth, their equity in their home. Sorry, next slide. I think there's a little time delay on this end. Let's go this way. So from 2019 to 2022, growth in median net worth was the largest 3-year increase over the history of the modern SCF. That's a survey of consumer finances. They do this survey every 3 years. They collect data, and this survey specifically came out September, so it's pretty recent. But basically they were saying that over the history, the median net worth has more than doubled. So that was over this most recent time span from 2019 to 2022. For families that own their primary residence, housing wealth increased substantially between 2019 and 2022 as the rise in house prices over this period far outpaced inflation. The median net worth value increased 44% between 2019 to 2022. Now, do you guys remember what also happened during this time span? I think you might. We had those pandemic years, right? So that was about 2020 to 2022, right? About 2 years. So obviously this did help to push the median net worth, but still, over the past 30 years, we've still seen a steady increase, but we did have that unicorn period from 2020 to 2022. Now, if you look at the net worth of home ownership households versus that of rental or renter households, there is a dramatic gap, we'll call it. about a 40 times gap between the net worth of a renter versus that of a homeowner. So that's a really significant number to consider when you're thinking about, yes, the cost of renting may be cheaper today, but what is it costing you in the long run is something that you should ask yourself. So let's take a look back. Now remember, this survey is done just every 3 years. But even back in 2010, when we were having, the foreclosure crash and whatnot, you can see, and these are national averages, FYI. But starting back then, even the gap then was almost $200,000 in terms of net worth of a renter versus a homeowner. Going all the way up to 2022, we see that gap has increased to, just under 400,000. So the gap is widening, as we said. Now, the gap in net worth has always existed. We can go back even further. Let's say starting back in 1989, you can see the green line on the bottom is the net worth, average net worth of a renter versus the blue line on top of a homeowner. And even looking back further in time, there's always been this big gap. So as we continue to go forward in future years, we may not see appreciation in the double digits in the near future, as we did some years in the past, but still you can see that the gap is still on an upward trend. Now, you might be saying that homeowners are older and they make more money. And that's why, they have a greater net worth. Well, let's break this down by income levels so that you can see that pretty much in every income level or income bracket, the net worth is still dramatically different. These are the averages, starting at an income level of 56,000 to 91,000. The net worth of an owner is about 264,000 versus the net worth of a renter being about 25,000. So you can see that's over a $200,000 difference. And this gap just widens as you go down the chart from the next income bracket to the next. With the income bracket of someone over $249,000, you can see how big that gap goes, over 2 million. Now I wanted to break this down by graph also instead of a table, just so you can still see the dramatic differences at every income level. And we even started at an even smaller income bracket, 31,000, to show you that this exists at, even lower income ranges. But you may be asking yourself, well, how can someone that makes $31,000 even afford to own a home? Now, again, these are national numbers, but you must keep in mind we have people that are towards the end or in their retirement years, and they may have a lot of equity in their home, even though they have a reduced income. They may have paid off their home by this point. So that factors in those people as well. Going all the way down to those making 151,000 to 249, you can see that there is an even greater gap in net worth between renters and homeowners. Now, I didn't want to skew the graph with showing the people that make over 249,000, so I just put this one on a separate slide. But I did want to show you that there is still a big difference. And then one thing to also consider is that people in this income range are probably also investing in other things outside of real estate as well. But still the majority of their wealth is in their real estate, which I want to show you here on this next slide. So if we break it down, you can see like the equity in your primary residence versus your other investments, with your primary residence being in the green and your other investments being in blue. You can see the that the home ownership or the equity in your primary residence for most people is still the majority of their total net worth, starting from the lower end of the income ranges, 31,000, all the way up to 249,000. So, as I mentioned before, at this income level, yes, you're going to be more diversified, and you're also going to be able to use the equity from your home to perhaps buy other investments. You can take out a home equity line of credit, you can pull out money, you can start a business, you can invest more in stocks, gold, other investment. It just gives you a lot of leverage to make better choices and better investments. Wanted to read this quote. Home equity is a key to building wealth because it can provide a property owner with a way to tap the value of their home, such as through a home equity line of credit or a HELOC. Um, and when they sell their home, the property owner will pocket more money after paying off their mortgage. So we all know that if you rent a place for 30 years, the landlord isn't going to give you any money when you move out, right? Um, on the contrast, if you own a home for 30 years, even having a mortgage that you're servicing, till the end, when you sell your home, if you decide to sell your home, I want to say 100% of the time, but I know I shouldn't. So I'll say 99% of the time, you're going to walk away with, your equity, with a profit, we'll call it, from, owning your home over, a long period of time, especially 30 years, and especially here in California. But these numbers are true across the country. Owning a home builds, equity. Across the country and across income brackets. And as I mentioned before, once you are building your equity as a homeowner, you're also able to tap into other opportunities as a homeowner. You can educate yourself, you can pull out money to go to college or to invest in other things to consolidate your debt. Now you don't want to tap into your equity though for depreciating assets, right? So don't tap in to buy jet skis and cars and depreciating assets like I would not assets, but depreciating items like that. The goal with tapping into your equity is to lower your overall expenses, right? And we're in America, the great USA. And one of the things I think a lot of people admire about our country is that anyone can start a business in this country, right? And do you know where most people get their seed money to start the business that's in their garage? The equity in their home. A lot of people tap into that. You ever heard of a little company called Apple? I'm sure you've heard of their story. And there are thousands of others that have started businesses in their garage off the equity in their home that they were able to pull out and invest in an appreciating asset. Now, when you are pulling out money from your home, I do want to mention that you should always keep, at least a 20% baseline, as we will call it. You don't want to pull out 100%, nor will most lenders allow you to pull out 100%, but you want to pull out up to 80% as needed. And looking at this chart, home equity helps foster new businesses. The equity available for homeowners to access before hitting the maximum 80% combined loan to value and new small business applications. I wanted to show a correlation here that as people build more equity in their homes, more people apply for businesses. So you can see how that's another just benefit overall, not only to the individual homeowner, but to the country as a whole, right? More businesses, more jobs, more GDP. It's a circular thing that happens when people are able to have that net worth, even if it's coming from their home, they can tap into their equity when needed. So some people may say this is a coincidence, the correlation, maybe it is, but I still find it significant that as home equity increases, so does the number of small business applications. Now, the equity is even more important for those that don't make a lot of money, for the people that are in the lower income brackets. You can see that up to the $90,000 to $150,000 income range, the net worth is almost 50% or higher for these people. So it is very important, no matter what income range you're in, your net worth in terms of equity in your home. Want us to read another quote. Overall, homeownership promotes wealth building by acting as a forced savings mechanism. I mentioned that before, and through home value appreciation. In addition, owning a home promotes intergenerational homeownership and wealth building. Children of homeowners transition to homeownership earlier, lengthening the period over which they can accumulate wealth, right? So, um, the earlier they buy a home, the earlier they can start building equity in a home. And children of homeowners typically become homeowners themselves. So with them being able to build their net worth in their home, they're able to pass this on to their children in terms of values, the value of being a homeowner, as well as perhaps helping them pay for their college, their education, right? A lot of parents are able to tap into the equity of their home to help pay for some of their children's educational expenses, which is huge. You know, coming out of college, someone having, I don't know, $100,000, $200,000, depending on how long you go to school, of debt versus coming out and having no debt is a big difference. And I would, imagine that those with no debt have a head start. They're able to buy a home sooner or invest in other things, start a business. So that's a huge advantage that you're able to pass along as a parent to your next generation. And let's not also forget when the parents or your parents pass away, which is going to happen for everyone, that equity is typically dispersed, right? If the parents decide to sell the property, there's two or three, heirs or children, or maybe a spouse, those funds are again liquidated and able to be dispersed to your family to help them get further along. Now I wanted to look at this chart, homeowner renter net worth by race. Interesting, right? So from the top, you can see that the difference is big in all categories. But what you can also see is how the gap is even greater with the column on the far left. Now, I'll save that deeper dive conversation for another day as to all the reasons why. But the point that I want to make here is if you want to help a people or a group of people to get out of poverty, we need to help them to get into homes. That is the best way or the quickest way that they'll be able to build their net worth is through building equity in home ownership. So we do see programs out there, government sponsored programs and, various programs through different lenders to help first time buyers, no money down programs, things like that. So I think the main thing we have to focus on at this point is not just the programs, but the education of, if your parents weren't homeowners, you may have a fear, even if there are programs out there available to you, you may have a fear of that, commitment or responsibility. Or you may just have lack of knowledge of knowing that, you don't have to have 20% down, you can buy with 3.5% or even no money down if you're a veteran, for example. So conversations are key to get everyone up to speed in terms of net worth and home ownership. Another quote I wanted to share. So these differences in home equity and other wealth fuel disparities in financial security in older age. So because home equity and other assets can serve as a nest egg to fund retirement needs, Homeowners and older adults with more wealth are in a stronger financial position to successfully manage the dual cost of housing and care. So this is going to be, I believe, a major issue moving forward as people are now living to what, 100 years old and beyond. So once someone starts working or stops working, excuse me, who's going to take care of them from 70 years old to 100? You know, it's a good 30 years. And if that person doesn't have a nest egg from, you know, retirement or from their home, that's going to be a problem. You know, maybe they can handle the housing needs, but as they get older and less mobile and they need more care, how are they going to pay for those additional expenses if they don't have an, you know, a nest egg or proper insurance even to help with those expenses? So I wanted to show you another chart. This is for those 65 and older, homeowner versus renter net worth. You can see that it's about 50 times greater. So that is significant. Now you're going to have a lot of more options in your care and in your housing. If you're a homeowner, you can sell your home, you can pull out a HELOC, you can do a reverse mortgage. There's a lot of options to tap into that equity, that forced savings account to help you in your latter years with housing and care needs. So I'm going to guess that a lot of you listening out there may already own a home, but I want you to also think about this in terms of the loved ones around you that may not. Those are going to be the ones that you may need to, if they're younger, hopefully encourage to get a home earlier, right? So that they will be able to take care of themselves in their latter years if they get started early and building their net worth through home ownership. So I just wanted to kind of go over some of the changes in home prices year over year. This is looking at Q3. That was the latest data that was published when I put this together. But Q3 of 2023 versus 2022 would be the prior year. You can see that although, again, we're not in the double digits, there's not crazy appreciation taking place, but appreciation yet and still is still taking place, which you can see the national average being at 5.5% since Q3 of 2022. And then looking at the same data, but quarter over quarter, you can see that the national average is still on the upward trend at 2.1%. Now let's look at the quarter over quarter in terms of home equity, homeowner equity gains. The national average of home equity in the home, meaning if you paid off your mortgage and you sold your home, how much profit would you walk away with right now? National average is $20,000. So let's do the math. That's what, $1,500 a month. So that's not bad, right? So in 2023, we all know wasn't the best year in terms of appreciation. Things slowed down, but as the economy turns and interest rates go down, I do think we'll see an uptick in appreciation in home ownership as well as home prices become more affordable again. Now, I wanted to point this out because, you know, a lot of people may say that baby boomers make up the majority, but as you can see here, as of Q2 of 2023, that they're less than 50% of homeowners. So Gen X and, you know, the millennials, they're seeing the value in home ownership as well, and they're finding a way to get their first home or condo or, you know, whatever it may be. And with wages going up and, you know, prices plateauing, rates going down, interest rates hopefully going down a little bit more towards the end of this year, we'll see that home ownership will be more affordable. And I also wanted to point out, I know sometimes people may say, well, your equity isn't liquid, you have to pay money to get a HELOC to take it out. But what about your 401k? Aren't there also costs to take money out of there as well? Right. So it is an important part of your overall wealth, even if it's, not as liquid as some other assets. You can always tap in through doing a home equity line of credit or, other resources. So that is all for me today. I thank you for your attention as we discuss the dramatic impact of home ownership on net worth. Again, I am Tia Hughes, a realtor with Coldwell Banker Realty. My contact is on the bottom of this slide if you need to reach me, or if you have any questions or would like to specifically know the value of your home or any other related information. I'm always happy to help. I'll turn it back over to you, Renee.
Thank you. And oh, as always, we always do designate that it is important for you all to know what is the top steps to know what the version is and to know how to build up your wealth and knowing what the proper steps are. And this was phenomenal, Tia, based on
Yeah.
all of the items that you did share with us. And that I hope everyone you took some major notes because, and to view this again and again, because as you know, it's in our YouTube. You all have gone in there to the YouTube. You can play it over and over again. And you will need to know what these rules are. And I highly recommend that you reach out to Tia because she is going to give you the most important steps, elements, the background on it, even though you think that you may know. She just shared a lot of things about what are some of these areas, the top points about how you're building up your wealth, but how you're sharing it and building it up. Um, and, not only for yourself, but family. So it is really, really important to know all of these. And I think that this is a key point. And thank you so much, Tia, because this is really important, especially now as we're into 2024. And as we get past this, this is going to be really, really key to know what these proper steps are. So thank you so much.
No problem. Thanks for having me.
Thank you for multiple times that you have been here and have provided significant updates and background and knowledge base to everyone. So
No
that's
problem.
why us, you know, smart women, we all are smart. She is super smart. And we want you to be savvy about building up your wealth in your life. So thank you very much. I hope you all learned a lot. And Tia, thank you so much for your time because I know
No
you're
problem.
busy.
No problem.